Hey, good morning, everyone. Welcome. It is May 11th, Thursday. So, where has the week gone? We got another inflation report that came out this morning, I should say, that we're going to be talking about, right? The PPI. Yesterday, CPI came out, and we talked a little more about that CPI from yesterday. But looking at the inflation report again, right? Stocks gained a decent bit, especially into the afternoon, where we managed to find some of the lows in our trading room. If you guys want to know more about that, check us out at tradeproacademy.com. But 115, we managed to find those lows. I was expecting to see a little more of the upside in the market yesterday, except, for the fact that we saw right in the morning that a Saudi royal was shorting billions and billions of dollars in terms of the US equity market. So a lot of that put a lot of downside pressure in the market, but overall the bid was sustained into the end of the day. Now, yesterday's inflation report, right, came out fairly bullish to start the pre-market session for the April CPI data. Showed inflation rising at 4.9% year over year, just under the 5.0 expected, and slightly easing from the March increase of 5%. And core inflation also eased slightly, while cooling in super core CPI comprised of core services, excluding shelter, may have further encouraged the market participants. So we got another report this morning, right? The PPI figures that came out, and we also have the PCE figures that do come out, I think, in a week or two, just before the next Federal Reserve announcement. But the PPI report came out, right? The expected U.S. core PPI year over year was 3.3%. The actual that came out was 3.2%. So again, another cooling in inflation figures. We also had the U.S. PPI, the year over year 2.5% versus the 2.3% expected. So again, a little cooler from there. U.S. jobless claims, though, rose to the highest level since October 2021, expected 245. 264,000 came out, which is putting some downside pressure on the overall market here this morning. So we also had earnings yesterday from Disney. Walt Disney earnings report mostly came out as expected, but streaming losses showed some quicker moderations than anticipated, sending the stock down about 5% here pre-market. And the company's direct-to-consumer business took up much of CEO Bob Iger's commentary on the earnings call, which offered what looked like some clarity about Disney's approach to Hulu, and related that we've only just begun to scratch the surface of what we can do with advertising on Disney+. Don't forget Mouse House's fight with Florida Governor Ron DeSantis. This is about one thing and one thing only, and that's retaliating against us for taking positions about pending legislation. That's what Iger declared. And Disney, the stock itself isn't trading that well compared to what Disney actually owns. So it's a pretty interesting fact right there. But overall, coming into this Thursday, I think there could be a little more downside expectations in the market the way this thing is going. We'll see what kind of news does come out throughout the morning session. But right now, there's a 97.4% chance that we do pause rates in the coming June meeting. This is what a lot of this inflation data was leaning towards. And today we do have Fed Waller goes on to the wire at 10:15. We have EIA natural gas inventory and then the Fed balance sheet to wrap up the day. But the the U.S. debt ceiling is of big topics now on the political front. We also have Jamie Dimon and JP Morgan talking about those things, telling us that there is a potential catastrophic result from this debt ceiling. So big banks aren't necessarily out of the woods and bullish on the coming macro events, especially with regional banks, right? Jamie Dimon said that regional banks this crisis should be looked at a little more closely, and that legislation should consider banning short selling on banks. This could get catastrophic. So that's going to be interesting to see how that plays out. Overall, the market just continuous bid day in and day out. Right now, we are pulling lower. And this is what I was talking about with our team this morning pre-market. We're in a distribution block to the we're about to open within a distribution block. We're coming down. There's a lot of volume at the tops that failed to make a push above. We're going to fail to open above 41.62, which is a huge level on the S&P 500 futures. So my plan today is there are regions including 41.58 to 60, which are pretty strong sell zones. But right now, it looks like we're going to be opening up around 41, like 40 into that area. There's a big sell block at 41.50. That's a huge area that's been magnetizing price over the past few days, this overall week, last week, right? It's been a huge dynamic price magnet, 41.50. So it's an area that you do have to watch. As long as we keep rejecting 41.50 to 41.52, I think we could see some downside pressure. We have the 39, the 40 below, and then 32, 24, 15 from yesterday, and 08. I'm going to lean a little more bearish this morning, especially how these markets are going to open up. I don't think that 41.39 holds too well. I would like to see some kind of buy side start the move so we can look for some of that sell side, right? Pop and drop, but it looks like the sellers already started. If we get more news that the Saudis are continuously shorting billions and billions of dollars of US equities, then we're going to see a lot more downside pressure. Right now, we're trading at that 40 area. We're about to break. There is, again, a lot of volume in a single print at 50 and at 57 respectively. Those areas are probably going to be shorted realistically. There's a lot of pent up bear bias this morning after yesterday's failure, right? Overnight failure, I should say, to really push prices above. So that's what I'm going to be watching for this morning. We're going to see how this thing shapes up. I did try to hold out that move from 41.15 into this open, but realistically, the way that this is going, you don't want to be giving up too much profit, especially on this last downside leg. So there's a lot of sell here pre-market that can continue throughout the day session. We're going to see how we do open, but that's one thing that we're going to have to navigate with our trading room that's going to open right about after this call. So if you want to check that out, check out TradeProAcademy.com and stay tuned for the live recording of our futures course here on YouTube. That's what I'm going to be breaking down for all of you guys. So let's get excited about that. I hope everyone is eager to find out more about that. And I'll see you guys tomorrow to wrap up the week, wrap up Friday, and have a great weekend. So I hope to see you guys on Friday. Let me know if you do have any questions down below, and we'll chat soon.